So Luka, part of ÄTERNITY Ventures, which is a venture arm of ÄTERNITY Blockchain, investing in projects that have blockchain as an essential part of them. We're not doing ICOs that much. We're mostly investing in companies who can actually utilize our platform or blockchain in its sense. Yeah.
Great. So at one point, I think it was April 30th, you were 1.1 billion. Today, you're about 100 million market cap. How does that feel today?
The same as 1 billion. I mean, the main point is that how we see it is that the token scene or the ICO scene is just another way of maybe a more effective way to fundraise. So we are an open source project, open source platform, and anyone in the VC industry can tell you that it's extremely hard to fundraise, especially a significant amount of money for an open source platform. I mean, something quite heavily understandable, trouble to scale, especially on the business side. So for us, it was let's say an efficient way to fundraise a significant amount of money. We were at the right time, at the right place. So we kind of ignored the, let's say, the market cap a little bit and started focusing on actually building the platform and built a team of around 160 people now around it. Launched the platform and mostly focused not on the...
Pretty big burn.
Exactly. I mean, it is a big burn, but in the end, we kind of knew that this will happen. I mean, all of us, majority of the whole team has been in the crypto industry since forever. I mean, this is how we met together. This is how we started working. So for us, there was a small time of, you know, euphoria. Oh shit, we're a unicorn, la la la. But
that lasted a few days.
That lasted a few days, and for us it was like, okay, you know, that fun was gone, now back to work. So we knew that this was going to come sooner than later, and to be honest, we kind of welcomed it a little bit, because at a certain period of time in this maybe 8 months, there was so many, don't get me wrong, like junk things happening in the scene, in the industry, and the level of noise was absolutely stunning. So it was very hard for good quality teams, good quality ideas to kind of break that barrier, because you had teams who, I don't know, fundraise from some investors some money and then spend like 300K on just broadcasting the message and, you know, on a white paper that was done in 2 days. So you had like on average 9 teams like this on one good quality team. So we kind of welcomed this a little bit. And we decided to, you know, build it from the bottom up, as opposed to these kind of things. So,
thank you. Yeah. Theo, you are the CEO of an advisory company called Token Invest.
Yeah.
You were successful in raising 100 million for one client.
Yeah.
Tell us about when that was, how hard it was, how many roadshows.
Basically, it was we issue a securities token, like a crypto bond, if we can say like this. So basically is traditional security, and we're talking with traditional investors. We're just putting the security on the blockchain to get some traceability of the investment and also liquidity. I will come back to subprime crisis with all the subprime. So it was some complicated products with no traceability on the underlying. I really believe that blockchain can be a solution for that in order to construct some products and to have a complete overview of the underlying. That's what we did with this real estate firm that tokenized about 10% of their assets. But securities token is not ICO, because we are not in the same thing. We are not in the same regulation. Securities token is securities regulation, so we have a very clear framework about how can we issue it. You just put a little bit of technique in it, and you have your securities token.
Was that 100 million in one round, and how many investors in that round?
It was one investor.
One investor?
Yeah.
Okay. And how long was the process, the due diligence process?
Well, can you repeat?
The due diligence process, how long was it?
It was, the due diligence was okay, because we knew him before.
Okay.
And so 1 month it was finished because it's law firms who did that.
Talking about due diligence, we have a lawyer here who's been through a lot of ICOs who then turn into STOs, and now they're getting lower amounts of money. Tell us about how much harder it is today to pass due diligence before you get any real money or small money.
I guess all the people here know lots harder. I mean, we barely see the amounts we've seen a year ago, 18 months ago, and there are several reasons for that. First one, as mentioned by Luka, we see there's more money coming into this industry, the more non-reliable people you wouldn't like to do business with are getting into this industry. Some of them went to cannabis now, but they spent some time with crypto, which caused a significant trust issue in this industry now. We've seen, that we see it also now. This industry was led for a very long time by CTOs and not CEOs. So we've seen many projects that even though they were amazing and raised tons of money, they have difficulties with running the token. First of all, with the lockups during the fundraising period, then with listing on exchanges, starting with a small exchange, going to a big exchange, which created an issue first of the dump at the beginning, which made lots of investors lose their money, even if comparing it to the price they paid during the pre-sale. And second, and I see it more and more today from the exchanges side, they have a much more comprehensive due diligence process to list tokens, which made it almost impossible to list a token at the top 10 at the post-ICO stage today. The lack of liquidity that is becoming more and more severe with utility tokens is super important with security tokens that have no liquidity whatsoever now, except for OTC service providers. And therefore, these two industries are currently on freeze. We can see not a lot of money getting into this, and even the money that is getting into this is done in the form that the investor wishes to have a fallback. And I think one of the projects we've seen yesterday mentioned it, maybe WeBuy. Most of the investments today are not done in the form of purchasing tokens or security tokens, but rather in the form of a CLA that at some point will allow the investor to decide whether he would like to get equity in the company or the utility token or the security token, or maybe even get the loan back. So this is obviously a very interesting way.
So it's back to equity, and the token is the bonus. That maybe one day will be worth something.
Yeah, but at least you have something. Maybe you have some influence over the company. It will be more transparent. We've spoken about transparency before. Yeah. If you're a shareholder, you have much more access to the data of the company.
Right. Luka, you guys are making smaller investments, 50 to 500,000. You've done about 19 of them, and this year you're looking to do how many?
I don't know.
How many would you like?
How we usually do investments is either early stage in a form of an acceleration program that we invest in and follow on, or direct, we call it strategic investments. We find something suitable for us that fits our goals, and then we kind of work our relationship around it, and then basically invest in them. Most recent one was Satoshi Pay. Exactly, which was a fairly straightforward deal. It's a payment process, a crypto payment processing solution for online content, and we know them since 2014.
But they have to be using your blockchain, obviously.
Yeah, that's one of the ideas. We did the investment, and as a part of the investment, we negotiated an implementation of ÆTERNITY platform as part of the deal. It is not mandatory, but it's highly regarded. Otherwise, it doesn't make sense for us.
Park Gene that presented earlier was talking about making a big announcement tomorrow. Maybe if they announce that they will be using your blockchain, that means they already...
I think we all understand what's the announcement.
We'll see. I mean, the announcement, Effecta is a very interesting product. So what the end goal from our standpoint is that the things that we invest in have a very good value proposition when it comes to blockchain usage, so that it truly uses the essential parts of blockchain. So pushing some things that blockchain is famous about on a normal product that actually doesn't need it, it's not interesting for us. So doing mechanical Turks and some sort of a artificial and machine learning platform, that's interesting because it holds data. And data is quite, let's say, sensitive. So decentralization, trustless nature, censorship resistance, all hits him. So that would be a perfect kind of thing. So number of investments, we don't have a cap. So it can be 20, it can be 5. Depends on what we see on the whole thing. So we're not flippers. We're not, let's invest in an ICO and then get immediate returns in the next 1-2 years. When we invest, we mostly invest because we want our ecosystem to kind of flourish.
Dictate the terms. Okay, great.
Long term.
And Theo, you're very rational in trying to raise a smaller fund today. 15 million is considered to be very small and hard for the management to make money with, but this is what you're doing. You're looking at doing about 10 million of it into SDOs and early stage companies, like maybe some of the ones that he's investing in, and then 5 million of the fund you want to do trading, right?
Yeah.
To produce some returns for your shareholders.
Yeah, basically, if I can explain the project in all the contour of the project. Cyrano Capital is a Luxembourg investment fund. So Luxembourg regulation is very flexible and they're very pragmatic, by the way. We're looking for raising funds of about between 10 and 50 millions with 2 goals. The first one is to invest 30% in trading, crypto trading, margin strategy, margin call strategy, and also traditional trading. And the 66%, 70% more in venture capital. Because we think that today, blockchain will make a revolution, by the way, in a lot of industry. You have some big companies that are coming into blockchain. They're not doing ICO every time because they don't need ICO, but they're using blockchain, the technology. For traceability, I will take the example of Carrefour in France. It's a supermarket. They're using blockchain, and you have also some big companies that they are developing their projects. And we think that today we have an opportunity to invest in infrastructure of blockchain, hardware, software, that will be the next leader, next licorne.
What are the amounts you're looking to invest per company?
About 100K to 500K per company in order to take between 10 to 20%.
And you're also going to take an active role in raising money for them, right? You're not just going to commit 100 grand in a 2 million round and say, come back to me when you have the rest. You're
why not?
Be involved actively to raise money for them.
Yeah.
Right, and that's the same thing for you, right? You don't just
we
make a commitment, here's a term sheet, and you wait because...
No, we will be, a partner of this company. We don't be some just investor. We'll be some partner because we have in our team some entrepreneurs, some tech experts, and we think that we can bring an add value to this team, and it's our main focus.
Right. And Roni, I'm assuming is the same thing for you, right? Because lawyers and accountants are always very well connected to funds and good projects. So your role is also a lot in the fundraising stages as well.
Yeah, actually in the past 2 years, I usually say that sometimes I'm a lawyer because I'm doing a part-time job as business for my clients. Sometimes me and the accountants are also CFOs. Sometimes we do the token economy because we see more projects because of our privilege. We can see more. And like 10% of my time, I'm a lawyer. So I think I'm much closer to these guys in my work than other colleagues of mine. And yes, that's a very, to some extent, it's a niche with very, very innovative way to invest money. On the other hand, it's becoming more and more traditional. And even when you look at the people that I'm involved in my team, we started with, high-tech startups lawyers that are assisting these projects. Now I'm dealing with the funds lawyer in my firm that are advising them. So there's another evolution of this entire industry.
This is what I always said to people when I used to organize conferences in the blockchain space, that you always have to be careful of who you're sitting next to, because that could be your next fundraiser, that could be one small introduction, one small piece of advice that could lead you to money. And most people disregard that, and they just go to the conference and they just try to look for the badge that says investor on it, not realizing that many of the investors that still go to conferences, they're there to raise money for some of the projects that they raised money or they invested in, and it's all convoluted together. So that's why the ecosystem works well, when there's the event organizer and the lawyers and the accountants and everybody else is leading and finding the good projects. And those who never find money, unfortunately, were never supposed to find the money. That's the way I look at it. And they're supposed to learn from that process, and the next time they come up with a great idea, they've learned the process of raising money. And that's really what I wanted to impart here today, is that raising money is a process, which we all know, but it's become harder, or it's not as easy as it was before when people were throwing money. And I always used to tell people why there was these $18 billion invested over 2-3 years. It's because if somebody bought Bitcoin today and it went up 2,000 times up in a year, then they're really not investing $1 million, they're investing 5,000 from just a year ago. So this $18 billion figure that the media talked about is not really an accurate number. It's just they took all the ICOs of the day when they closed. Like I remember Bancor in Israel, June 12, TAS invested $1 million in it. And I'm looking, as they got to 153 million, and they announced it in 2 hours and a half. And within the next half an hour, it was down to, I think, 140 million. So they lost $13 million in value of Ethereum in a matter of minutes. So,
not to mention, first of all, Steering Labs during their ICO,
right,
they raised 80, if you calculate according to the rate at the beginning of the ICO,
right,
but eventually end up with 158.
Yes.
Because Ether went up in like 100% during these two weeks. Mm-hmm. And what I want to say about the 18 billion is that, let's say, I believe at least 50% of them are money that was already invested.
Yes.
I mean, all of this booming was due to the fact that people made money in their first ICO, so they've taken this money and invested it again. So
exactly,
there are like, I would assess about 20,000 people that will keep on investing, mostly in Asia, over and over and over again. So I'm not sure the turnover may be 18 billion, but it's not, uniques.
Right. The good thing is now we're back to more of a reality check, and now people are calmer, and there's less people at conferences, which is good, because when you have a 5,000 or 3,000 person conference, everybody's running crazy trying to meet people for 30 seconds, not realizing that we as people, we still need to build friendships and relationships, and there's trust that has to exist in this trustless society we're trying to live in. So, but going back to getting money. So how many meetings and follow-ups? Because most people just go, they meet someone, they do 2 follow-ups, and they think, okay, they're not interested. And they don't realize that that's one of the tests of seeing how good you are as a salesperson. Because if you're selling me on how to invest in you, and you're going to come and knock on the door 20 times, that's probably how hardcore you're going to be knocking on the doors of a big strategic partner or a small client. So that proves to me that the sales cycle, you're not going to give up on a client, which is revenue, which is how I'm going to possibly ever get my money back. So do you test people like that?
Absolutely. I mean, so this startup business, building a project is really hard. I mean, in a normal case, in a normal world. And people are trying to build it in the blockchain space. It's like you're trying to run a marathon with concrete shoes, and they're shooting at you at the same time. So we've seen a lot of people who have a great idea, have apparent, in the first contact, you see that they have the right motivation, but then somewhere along the line, when the first major obstacle comes along, they just either give up or are dissuaded or discouraged. So that's one of the first things that we kind of test. That's why, so for early stage teams, that's why we created this Genesis Week. We call it the kind of a boot camp type of thing, which is very intense. Look, you can be a good salesman and you can sell anyone to to like sand to the Arabs, I don't know, snow to the Eskimos and stuff like this. But this is not gonna make you build a product in the end. You need to have grit, resilience, resourcefulness. You need to be stupid a little bit, you know. So we're trying to find are all these qualities present in a team itself. So that's why we created a program for early stage, because they don't have, they just, you know, can say, trust me, I can do this. Then you need to test them. So it's a week intensive work, 12 hours per day. And the purpose of this is partially to wear them off, to tire them. Because when you're working 12 hours per day for a week, then, you know, your masks kind of, you know, you're less prone to bullshit, or your kind of deception, if you have it, leaks. So we do that quite often. I mean, I have an example of a team from Nairobi, from Kenya, two amazing individuals. They're doing microinsurance on blockchain, and it took them 6 months of talking to us, constantly building and updating to get the first money from us. And it was intentional like this because we didn't believe that, we believed that the problem existed, we believed that the solution is like this, needed to be built, but we didn't believe that they were the right ones to build it. Unexperienced, first-timers, no connections, no technical background, and constantly, you know, month over month, they were chasing us, you know, pulling us on the sleeves, showing us what they've done month over month, and in the end, we ended up investing in them. So you have too many people who are, like you said, 30 seconds per person, you know, it's like a shotgun, you know, technique, spray and pray, see what sticks on. And that's the old days. I mean, I've been in the investment industry for a while, especially the early stage, and for anyone who've seen a lot of teams like this, it's easy to detect. And, you know, that's the first filter. Okay, this guy is, you know, just running around trying to chase 50K here, 50K there. Yeah.
So Theo, you had an easy time, you said 1 month, and you already knew the investor who put 100 million in your big client.
Yeah, I was lucky.
You were lucky, right? So are you going to make people work hard to get a part of your investment fund?
Yeah, it's complicated sometimes because, you know, I think that each investment propositions has one target. You cannot sell a securities token, a bond token, to all your investors. You have to know your investors, your pool of investors. And the behavior of people, of investors, is the same as in traditional finance. You know, all our economic theorems don't change with time. They're still the same. And you have some people with risk aversion, with different risk aversion level. And yeah, basically, the first things we do is to know our people, to know our investor pool, in order to offer them the best opportunity for them. And yeah.
And Roni, I'm assuming a lot of people come to you and say, I don't have money for a lawyer, but I'll pay you after you help me raise money, right? So here's some equity for you, here's some tokens. So that worked for a while, but now it's now there's no more liquidity.
Exactly. So I agreed to that during 2017, with significant upside, obviously, but we can see during 2018 I had more downsides than upsides. So we changed our model, obviously, like the entire industry. All advisors in this industry moved from success fees to retainers. So lawyers follow.
Great. Well, listen, we could talk forever and ever about raising money and our individual experiences and what we went through and what we're dealing with today, but I think it's better to open it up and get some questions from the audience, because I'm assuming you must have some very direct questions to some of us or all of us. So please raise your hand if you have a question. We'll get a mic to you. And if you don't have any questions, because I don't see any hands up, then we could always meet for lunch and take it private. There's a question. 1 second. Yeah.
So say, for example, you have a project and you want to secure IP for the project so that you can then look to secure some investment. If the IP process tends to cost a lot of money, is there a means of getting sort of some seed money to protect yourself without having your idea stolen in the first place? Or is it a case of get the IP off your own back and then go the traditional investor route?
Well, like everything else in life, everything is a catch-22. So, you know, if you come to an investment fund and say, I need 100,000 to go pay a lawyer to protect my IP, I don't think you're going to get that money, right?
Won't
So
have
you
any
need
IP to protect.
You need to find friends, family, and donors, as I call them. I don't want to call them fools, to contribute the first money for that early stage
Awesome, thank you.
need that you have. But
Basically, it's just like any other startup. I mean, any company, everyone in this room are crazy because they forgot about how was it to raise money during 2015, 2016. The road shows in Palo Alto with the family offices, they gave you like 20 seconds to give your elevator pitch, and then a due diligence of around 6 months, and then you get like 50K. The people in this room got used to raise 4, 5, 6 millions in 2 weeks with a dream, without any due diligence, without any nothing. So we're just getting back to a traditional fundraising instead of giving papers or rights, traditional rights in the company, we give something that is a bit more innovative, a bit more liquid, but we're still getting back to the traditional fundraising scheme. And just like startups are using lawyers and they have their own IP and they work in the garage before they rent their 3 floors office with an ocean view. So the blockchain world will get to the same process just like we used to have.
Just to add one more, just a comment on, I don't think we're ever gonna go back fully to the old ways of doing things, because if this was an optimal way, the ICOs would never exist. So I think there's going to be a hybrid of some sort. The negative sides of an ICO was that people went crazy and they were investing money without, you know, based on a pitch deck and, you know, nice faces on a website. Investor here, advisor there, la la la. So that got a lot of people burned. But you have the other side that you just described, 20 seconds and 6 months of, you know, due diligence, which is absurd. I don't think any of these are optimal. So what's going to happen is we pushed it like 5 steps up. Now we took 3 steps back. So we're going to figure out, you know, how to go in a way. So, and this question is actually a good question. It's coming from the old ways. Intellectual property is usually worth nothing until it's applied. So IP is just like another pitch deck. So unless you have 20 years of R&D into this IP or something super unique, which, you know, you invested a lot of time and money, and even if you protect it, it's not going to help you. Chinese are going to come, they're going to, you know, utilize it to the max. And whenever somebody comes to us and says, "Oh, I need money to protect the IP," I say, "Okay, go to someone else." So.
Just to add on your first comment, I fully agree, and this is what I mentioned. The issue of the form of the investment. The fact that we have liquidity and we're not longer in a private placement world where we can get stuck with our equity with the company makes it much easier to invest. So if 5 years ago you had the very heavy due diligence process, very slow, very low money, then we had a process during which you presented your project and the only question you got is, which exchanges are you speaking with? Now they're asking about the project and the exchanges in parallel to see whether the project is good enough, A, to be listed, and B, to have liquidity and appreciation of value.
Great. Any other questions? All right, one more. There's a microphone.
Sorry, Bogdan, a quick one. Yeah. So let's make it real quick. So we do have it was an ICO we served. We're coming from digital marketing background. So these guys launched an exchange. I don't want to mention the name, and because they were not smart enough to hedge the ether, they raised like 12 million. They are running out of money. So they're now raising 5 million. Exchange is launched. Looks much better than like interface-wise, really for dummies. My mother can use. Looks nice, looks attractive, but struggling to find the money. So I'm starting thinking that an exchange business right now is not an investable venture from the VC perspective. Would like to hear your opinions there, because there's more exchanges here. Like I've met Lithuanian team here, and they are launching a new exchange right now, well, using their own funds, right? But still, like, is the exchange business is investable and attractive from a VC perspective at the current crypto winter time? Oh, sorry, you have the mic. Yeah.
You were asking about crypto exchanges, right? Yeah. Just because I couldn't hear everything. I think that there's some information I cannot share, but I think that the lack of regulation, specifically regarding crypto exchanges, that even those which have regulations are only on the AML side, or they're only aimed to Japan, because you wouldn't have a license in Japan to serve non-Japanese clients if you can work with our license. This brought us to, as I mentioned again, a serious trust issue with exchanges. Some would say that 80% of the trading is fake, and some serious people working in financial industries are telling this on a daily basis. And I think that we, at the 10%, I'm a lawyer, I think that my opinion is that at the end of the day, regulation creates value. And I think that the reason that the most valuable exchange sold Bitstamp, that according to the news was sold for 400 million, is the only exchange that is licensed for being an exchange. And as more we see regulation coming into this world of the financial nature, financial trading of cryptocurrencies, the value of exchanges and their trust will increase as well. And as we see the fall of the forex industry in Europe, the death of the binary options industry in Europe, and the fact that crypto allows more transparency on one hand and lack of customers' protection at the other hand, I definitely see a pink future for the exchange space. But we need to have regulators more focused on this. As of now, I think their main focus was to prevent securities from being traded there at first stage. The second, and here you have a problem because there's a very different definition of securities between US, Canada, and Israel, and non-US, Canada, Israel jurisdictions. Then they moved to AML. And now they're speaking about regulating the exchanges themselves. Europe is now divided to jurisdictions. We cannot see a European discussion about this, just like we have in financial services businesses. And I think that in a year or two, we will see the EU market facing a decision of whether to have the financial services model, whether European directive and every jurisdiction should adopt it to some extent, or the gambling model, where each jurisdiction has its own regulation. And there's a reason for that, because there you have significant markets that are aimed towards gaming, and gaming is not as legitimate as financial services in most cases, in most jurisdictions. And the bottom line, absolutely. It will be super interesting to see what happened with exchanges. I think that more regulation we see there, more valuation we see there as well.
Great panelists. Thank you, Mike.